All right, folks, so let's take a look. You have the market rallying. It's making highs, higher highs, higher highs, higher highs. What does that mean? That means you only look for long trades. Why? Because the short side trades have very little expectancy, or very little R, very little reward, and they will not work with your risk management or profit taking strategy. Short trades and counter trends do not give you even 3R. They just don't. If you see the trades that are counter trend, you'd be lucky to get 2R. Typically, they don't give you 3R. Typically, they barely give you 2R. So, I mean, over here, you can see over here, if you took the short here, because it was starting to turn red, you would have one box. If you took it here, you would only have 2 boxes. Here, it's just setting up. If you take it on the long side, you have 1, 2, 3, 4, 5. 1, 2, 3, then 1, 2, 3, 4, 5, 6. So clearly the long side of in a trend always has more R. So that's one of the primary reasons. The second one is you will fall into the trap of the perception shifting back and forth, messing with your perception, messing with your decision making, and that will eventually lead to incorrect trades. Because to be honest, the folks that trade both sides, they try to make money on the up and the down, they're actually trading out of FOMO because they see it's an opportunity, quote unquote. They don't realize that you can't make money that way because there's too much changing the strategy, this, that, whatever, changing the profit targets. Anyway, so I'll give you a real example. So here you have a base, you have a breakout, right? So what do you know? You know it's in an uptrend, you have a base, you have a breakout. What do? You buy the pullback. Market comes, tap, gives you the new high. That's the trade. One and done. All right. Now, if you think from both perspectives, let's say bullish and bearish, you know that up here, look at all these boxes, 1, 2, 3, 4, 5, 6. There's some distribution here. There is. And it gives you the big red bar. What does you do? You short the retest. What happens? It gives you a move, right? But you don't know whether you should get long on that level or short the resistance, and you're going to go back and forth between that, right? So it's going to create unnecessary stress and tension, and it's far better just to keep one side of the market, because the shift in perception back and forth will create stress, will create missed opportunities, and is acting out of FOMO, so will eventually lead to losses because it's FOMO driven. All right. Okay, so anyway, now what am I looking at? I'm looking at this pullback right here. We have right here between 45.50 and 45.70, especially 45.50 level. There's a lot of volume there, and as you can see, this, let me bring it a little lower. This is I think the creek or something, the creek, right? So this area here, let's bring it down to here. This was reaccumulation on the pullback, which initiated the rally. Now we're having a rotation that should come back into that same area. When it comes back into the same area, what do you think you should do? Look for reaccumulation, right? So we had some selling. Let me see how much juice is in here. Oh, this is not a small move. I mean, I don't know how long it's going to go, but if I take the entire count, 11, 12, 13, so shit. Yeah, it's about 40, 45.50-ish. So looking for this to go into the 45.50 here area, maybe spring, but this is where I look for reaccumulation off of this base, intraday base. minor distribution, causing the rotation into this area, and then we'll see what happens. All right, thank you. Bye.